going on, everybody? Good morning and welcome back to Beat the Bell. Hopefully you guys are all having an awesome trading week thus far. So on Monday's episode, we talked about how the pace of things had changed a little bit. SPX put in its first red week in 5 weeks last week, but this week, the Bulls are back charging, it appears. Important day today, and to talk about it, we've got an awesome panel starting with Money Mander. Money Mander, good morning.
Big day. Happy hump day, everyone. We'll see if the Bulls can continue. Big squeeze yesterday.
All right, Diamond Trades. Noah, what's going on? All right. Don't worry, guys. I didn't hear what he said either. All right, Fed forecast. Let's jump straight into it with Noah, who is hopefully unmuted now. Oh, Stock Snipa, pull it up late. How you doing? Good morning.
Good morning.
Oh,
Can you hear me?
You got the hoodie on, and it looks good once again.
Can you hear me?
You're good.
Yeah, you're good to go. Fed forecast, economic calendar. Let's do it.
Word. Let's dive right into it. So for the economic calendar, we've got the first of 2 days of Powell speeches across the pond today. So we have the first, he'll be at the ECB conference this morning, starting in about an hour. And then the second, he'll be at the Bank of Spain tomorrow at 2 in the morning Eastern time. So that won't be during market hours, but that's 2 times in the next 24 hours that Powell will be speaking on interest rate policy. And we're sure that will obviously affect the market. So be on your toes for that. Initial jobless claims, GDP growth, and pending home sales will come out tomorrow early in the day. And then to Friday, well, we're going to wrap it up with PCE, Chicago PMI, and UMich. So a relatively busy week for news. Stay on your toes, particularly in the morning sessions, as we're going to get a lot of economic data. Let's go ahead and dive into trading so far this week. So yesterday, following a really, really choppy AM session, the market rallied broadly, making up the declines that it suffered on Monday to start the week, in part due to fresh economic data that signaled renewed economic strength. So the S&P added 1.1%, the NASDAQ tacked on about 1.6%, and the Dow chipped in 0.6%. Manufacturing PMI rose 1.7% in May. This is the third consecutive month of increases there, led by strong demand in the travel and auto sectors. Delta also raised guidance for the second half of the year, giving airline stocks a boost. You saw names like Delta up 6%, United and American Airlines both up 5 and 5.5% respectively. As we've touched on before on the show, these readings can be somewhat of a double-edged sword, right? On one hand, you have that the fact the Fed is getting nearly the end of their tightening cycle. Investors are starting again to perceive, good economic news as exactly what it is, good news. We were in a situation there for a while where good news equals bad news. It means that the Fed is going to have to raise more. And, the market oftentimes would drop when we get good economic news. But lately, we've been seeing the market rally on good economic news. And that's particularly because more or less investors have a clue of where the terminal rate is going to be, right? Whether it's going to be 1 or 2 more hikes, investors have a pretty solid, a pretty solid benchmark for where interest rates will eventually top out before the Fed ultimately begins to cut them. And so we're in a situation where we're getting this economic data that's good, and people are saying, okay, look, it's proof that the economy is strong. And sort of betting on this being the start of a new sort of paradigm shift and bull market for the economy. The second, on the other hand, you still have the fact that it puts the Fed in an even tougher position, as if their goal again is to get inflation down to 2%, these are not necessarily things that you want to see. You don't want to see massive economic growth. You don't want to see really tight job markets. You don't want to see wage pressures coming up. And so that may cause the Fed again to sort of change their plans going forward. And as we know, that's really what moves the markets, right? Is when the Fed changes their expectations of what they believe is going to, or what they sort of tell the markets they're going to do with rates going forward. And so it'll be interesting to see, what Powell has to say today and tomorrow about, really the aggressive sort of resurgence that we've seen, in the U.S. economy so far this year, and what that's going to mean for rates going forward. Mander, what do you got?
Yeah, I'm curious to see, because I believe he's talking with the president of the ECB. And if I'm not mistaken, they just did a 50 basis point hike at their last decision, whereas we went with a pause. And so I'm really interested to see if they have any dialogue back and forth between the two of those, because I know over in the Eurozone, they've had way more elevated inflation than we have, and even more sticky than ours. Ours has been able to come down a significant more amount than they've experienced over there in Europe. So I'm curious to see any conversation between those. But besides that, I think Powell's been a broken record. So
Technically, they also dipped into a recession in the Eurozone as well. Whereas we like very briefly had one. But yeah, continue.
That was all I was going to say. So I'm curious to see any dialogue between the two of those, and if Powell shifts any sentiment. But I wouldn't expect him to. So at least we'll see. 9:30 is a rogue time to have him speaking. Ridiculous. With the high volume at the open. But I'd expect similar sentiment. I don't think he really busts markets here. I'm not expecting a Jackson Hole event like we saw the last time all these speakers got together. But moving forward, the only thing I wanted to cover, breaking news overnight in the chip sector. So going along this arms race we've seen in the AI moving forward, I know the big conversation point outside of seeing these mega rallies in the AI names has been between international problems with the AI race. Obviously, I think that was the biggest push in not regulating it, is that we want to be at the head of this, and we have the biggest companies producing these semiconductor chips. But overnight, the Biden administration officially stated they're considering more restrictions than they just put in October on exports of these AI chips to China and other countries of concern, as this rise of power and technology kind of gets more into the hands of the U.S. rivals that we don't want to see. So the Commerce Department said they could move as early as next month with a move that would seek to further crimp those pushes and the AI capabilities that we've been seeing after the restrictions they just put in last October. So last October, NVIDIA and all these other AI chips, they put in a regulation on the power of the chips that can be sold to China, namely, but a lot of international companies. And so what NVIDIA was able to do is create a version of their A100 chip. That is the big one that we use over here in the AI data centers in the States. They came out with the A800, which is basically just nerfed down a little bit, less powerful, but they were able to still have revenues come out of China and sell those abroad. But now they're looking to put in additional restrictions on what type of chips can be sold over there. So I'm curious, as this move forward, NVIDIA is down 3% in the pre-market. AMD is down 3% in the pre-market. Really what has the NASDAQ down holistically in tech. NASDAQ down about 0.5% here moving forward. China accounted for over 20% of NVIDIA's revenues last year in fiscal year 23. So if the government's going to put a block on 20% of their revenues, I'm sure they're not going to be able to not sell anything to China. But if they go and hinder, the power of chips, and now they have to revise that A800 and make that weaker, it's really going to hinder NVIDIA's revenues. And this is a name that's trading at 133x. Their trailing 12-month PE. It's priced for hyper growth here, especially after that last earnings report when the CEO came out and beat forward guidance by 50%. I think they projected over $11 billion in revenue for this upcoming quarter. If we really have this start to go, I think it's good fundamentally for the country trying to bottle up our proprietary technology here and not let it get in the hands of other countries of concerns like they're trying to do. But for these companies that have really exploded on this boom of AI and semiconductor production, I'm curious to see how this goes moving forward and if they're able to navigate around this like they did with that last time.
This is the first bit of bad news for chip stocks in a while, and it's crazy because I also just saw this this morning that the AI frenzy has really accounted for about half of the gains so far this year. So when you look at the information technology sector, in terms of market value, the market value at the beginning of the year was around 1.9 trillion of all the information technology sector as a whole, and today that stands at about 10 trillion. So that's a 5x in about a year and a half. And so this is definitely an interesting roadblock that they've sort of been put up against after this amazing rally with really people starting to believe that this is the like a paradigm shift in technology, and it very well may be again. But like you said, this is sort of the first roadblock or sort of speed bump that we've seen for these stocks that have seemed to just really break through any other headline that gets thrown at them, right? I mean, NVIDIA, AMD, a lot of these are AI stocks really have not seen any sort of headwinds that they've had to deal with in terms of headlines this year. So it'll be interesting to see how the market reacts. Obviously, NVIDIA down aggressively pre-market here. We'll have to see how they trade during regular hours. But one more thing that we could touch on here is that the VIX, right? So the VIX, which is now down at 14, the VIX has fallen below basically its lowest level since February 2020. This is known as like Wall Street's like fear gauge. It's essentially a bet on volatility in the market to see when volatility goes up, and essentially that means stocks come down. That's when the VIX, will shoot up as people are, buying downside protection on the market. The VIX at 14 means that people are not necessarily concerned about, a lot of these perceived headwinds in terms of like, economic data, Powell's, sort of path forward with interest rates. People are not buying as much downside protection right now, which is interesting. But at the same time, there's a lot of call volume in the VIX. So the average daily call volume in the VIX on a monthly basis this month has been the highest ever. And the last two highest months that we had were March, which was essentially during the bank panic, right? When we had SVB collapse, and that was the second highest, and the third highest was March of 2020 when COVID became a realization in the United States, and we saw the market drop 20%. And so it is interesting to see that as we head into the summer here, which tends again to be a bit tamer than the other months. July on average since 2013 or over the last 10 years essentially has the lowest like percentage daily move, so you're the least range intraday, right? So July historically really does not have a ton of volatility, so it makes sense to see the VIX so low. But it is strange to see that elevated call volume coming into July, a month where again you're really not expecting to see a ton of range, and a month again where when you look at the last two highest call buying months in the VIX with the bank crisis in March and then COVID in June of 2020, this one sort of sticks out as like why is there so much call activity going on in the VIX? And I think that's something that we should probably pay attention to going forward for sure.
Pay attention to for sure. I don't really have any input on it because the VIX has felt quote unquote broken for so long. We've seen many days where even with the indices being down, the VIX will still be down. As we'll have sell-offs and pullbacks, but it's not like people are loading up on downside protection. It's more so just profit taking and then dip buying. And we just see every red day gets met with call buying action in the indices in names across the board that then rockets it to higher highs. So I'm curious to see how that pans out. But I think that's a good way if people are looking to hedge versus necessarily maybe taking puts on names that you still want to hold. Because obviously if your put gets exercised, you're then selling your shares and you're getting exercised. I think that's a good way to hedge and maybe just make back money on the downside without having to take profits. If you're still thinking that we're in this bull market and you don't necessarily want to sell your shares, you could still make money on VIX calls and keep a hold of all your shares that you're holding. So that could be
cool. I have a cool stat for that one too. This is the last thing we'll do. It's been more than 3 months since the S&P 500 has pulled back at least 3%, and according to Deutsche Bank, that is one of the longest stretches since World War II.
That's
since
crazy.
World War II, 1942. So absolutely insane. This type of dip buying, as Mander just described, the market hasn't pulled back 3% or greater, in 3 months now, in a full quarter, right? And so it is interesting to see, especially with the bets that we're seeing going on in volatility. That'll wrap it up for us here at Fed Forecast. We'll pass it back to Alejandro.
All right, guys, awesome segment this morning. Thank you very much. Let's talk about the S&P quickly here. We're taking a look at the system. Congratulations to everybody who got long yesterday on the break over the 50 SMA. We talked about this on Monday. We talked about how we started a new downtrend when we got the sell signal, the 10 SMA crossing below the 50 SMA on the 30-minute SPX chart, 50 SMA serving as resistance. We break over the 50 SMA on the 30-minute. Finally, after it served as resistance 1, 2, 3, 4 times, and what do you know? We get a nice rally intraday. So again, congratulations to everybody who caught that move. Phenomenal trading there. Now, coming into today, yesterday at the close, we were kind of peeking our heads over the 50 SMA on the 1 hour. Okay, so bulls really do want to see that hold. And for greater confirmation that we can start a new leg up, we're going to want to continue to trade above this 1 hour 50 SMA. Now, we are pulling back here in the pre-market. And important to mention, important to recognize that the day after a squeeze like we saw yesterday, where we rallied 60 plus points in ES futures off of the 43.68 low, things get more tough because people rush into short. You don't know if you're shorting into strength, and then people rush into buy the dip. You don't know if we're going to knife through a few levels on a pullback, and so it's one of the more difficult days to trade the day after a big rally. Okay, so keeping that in mind. So if you're long from yesterday or you got long yesterday, make sure that we're taking our profits on the way up, because that alone was a winning trade. Now, very simple. We want to stay above the 50th SMA in the 30-minute, and we want to see it start to curl up and put in a new uptrend, because that is how the previous uptrend started. If you guys remember, we got this sell. We were trading below the 50 SMA briefly. We come up. As long as that 50 SMA is in a strong uptrend, that is very good for bulls to see. But this was textbook system price action, and it was an actionable and beautiful trade for those that took it. All right. So that's the system. That's the S&P 500. That's what we're looking at coming into today. Now we're going to go to Bet the Bell with Stock Snipa.
For the system, I'm going to pass it over now to Ramsey Rippers for Bet the Bell. Good morning.
Good morning, guys.
So here's our stats. Hondo's currently at the top. Got quite a lot of wins above Mander. Diamond does have quite a lot of wins right there, but Mander has less overall. But pretty interesting right now. Sitting at
all of us 0 for 3 on Monday.
We were? Did we say green?
We all hammered green.
We all said green, yeah.
Yeah. So, green or red? Hondo.
I'm going to go green today.
Okay. Mander, what you got?
Today's a tough one with the action I'm seeing in the chips, but I'm going to take green as well after yesterday's bullish engulfing.
Dan, what you got?
Snipes, can you go first? Pick.
I wanted to be the guy to pick red, but okay, I'm going to pick red.
All right, word. I'm going to go green. I couldn't have us all pick green again. I couldn't do it. It would just be a terrible look.
Yeah, totally. So let's get into the interesting stuff, right? Which would you guys rather own, and why would you rather own this asset? Google or Microsoft? Diamond, what you got?
Oh, wow. I will go I'll go Google. I'm going to go Microsoft. I'm not going to go Google. I'm going to go Microsoft. Google's one of my favorite stocks, so it really is hard to say that. It really is, and especially their user base and their moat and how great they are. I'm gonna go Google. I'm sorry. I'm gonna go Google. Google. It's too dope. It's too dope for me to not pick. I mean, they're.
What's this guy doing?
They literally have. They literally have one of the best products. They literally have one of the best products I think ever made. Like when you look at it from a product standpoint, I don't know that they have a product that delivers more utility to the human race than anybody else. Like Google is lifesaver. Google is one of my favorite products ever. And so I have to pick Google. I'm sorry. I tried to make the case for Microsoft and I just can't do it. It's got to be Google. It's got to be.
I'm sure that was your favorite question I've ever asked you.
He's so excited.
Google, Microsoft. Oh God, I don't know which one to go with.
I love them both. They're both awesome. Both
yeah,
Google.
yeah. So Google is your final answer, though.
Yes, Google.
Hondo, what you got?
I definitely got Google. What was it? Wolf Spaces that I was talking about it. The AI potential with Bard once they get that figured out. Noah mentioned it. The moat, the user base, it's just ridiculous. Google is one of my favorite stocks. And I think it could have a really good second half of the year. I keep saying that. So, yeah, definitely Google for me.
So I know exactly what Mander's going to say, and I see him getting, itchy over there. What you got, Mander? Google or Microsoft?
I'm taking Google as well. I'm hammering Google as well. It's really in turmoil in the stock right now. It's really consolidating. But here's my thing. With Microsoft, they exploded because they were the first ones to the AI race, right? They had ChatGPT they partnered with and OpenAI. They exploded off of that. But at the core of their business, their cloud service is down on Azure. Microsoft just feels outdated. And so Google, to me, if we think back to even with Apple and cell phones, Samsung and Nokia and LG, those were the names you had to have when cell phones were new. Right now, who runs the cell phone space? It's Apple. So I think Google knows that they have the data that can make the best AI out there. They just want to have. They're not going to release it until it's the best. And so I think I'm going to sleep on Google here until it explodes, and Google will definitely be the outperformer here.
Yeah, I figured you would say that. So,
YouTube, dude, I mean, like, imagine life without YouTube.
I mean,
their mode is like Diamond said, their mode is uncomparable.
The reason, so what happened as well is that I knew that Alejandro and Sal would also pick Google, and so I was going to try and make a case for Microsoft. Realized that I couldn't do it halfway through, but I did want to point out that Microsoft, realistically, there are a few companies that are poised to really capture AI in terms of the benefit of AI and the effect that it's going to have on Silicon Valley as a whole than Microsoft. I think that Microsoft, like, I don't want this to be like a oh, it's obviously Google. Like, Microsoft sneakily, they really are positioned very, very well to benefit from AI as well. Like, as Sal said, they were basically first with ChatGPT, and you know, I think that they can see a lot of benefit from this as well. So I don't want to pretend that, like, you know, this is a Google only race. Like, Microsoft definitely has you know, some chips in this race, and I think that they have to be taken seriously. Microsoft definitely has shown a history of being able to execute on paradigm shifts and new technologies, and I think that if they can continue to do so, I mean, I don't think that either of them is a bad choice to be.
I think Microsoft has the edge for sure in the corporate integration of AI, because corporate America is literally run off of the Windows platform with PowerPoint, with Excel, with all of that, PCs running on Windows OS. And so if they're able to integrate AI into a corporate sense in one of those platforms, and they obviously have the clear edge there. I think from a consumer AI standpoint, Google stands far superior once they get that rolling out.
I mean, they literally own OpenAI. Like, let's not forget, like, they actually own OpenAI. So continue, Snipes.
So now I got a pretty interesting question for my last one. You know, after everything that's gone down, you know, some people would think, wow, FTX. Wow, we're still talking about FTX, or I haven't heard about it in a little while. But you'd think FTX is absolutely destroyed by now, maybe no shot. Or some people might think that FTX might come back up. We got some news that FTX is moving ahead with efforts to receive its cryptocurrency exchange, per Wall Street Journal. Will FTX boom or bust, in your opinion, guys? What do you think? I'm going to have to start it off with Diamond.
Boom or bust? I'll say bust. I'll say, but I don't think it's going to be like a catastrophic sort of bust. I think maybe it'll like fizzle out, or maybe it'll transform into something else. But I mean, I think the bust already happened, right? I think when you look at FTX, what did their management was able to recover, like some ridiculous amount of liquid assets. I want to say like north of 700 million. I would have to fact check that really quickly, but you know, it's not like Sam Bankman-Fried is any longer in charge there. And like I said, it seems like the damage more or less has been done. Maybe like on the margins, you'll have, you know, some more things come out, and that could be possibly negative to the company in the end. 7 billion. Thank you, Ryan. So FTX's management was able to recover 7 billion liquid in assets that they thought they had lost. So, you know, I think it's a situation where the worst might be out of the way. You know, I don't know if necessarily that means that they resurge as, again, one of the, you know, largest cryptocurrency exchanges in America, particularly with, you know, the SEC positioning right now on cryptocurrency exchanges as a whole. I mean, Coinbase is struggling. They're one of the most, you know, transparent in the business, and it seems like, you know, the SEC is sort of hell bent on, you know, for whatever reason, tripping them up. So, you know, it's not like it's going to be an easy path back to the top, and I don't think that they will ever be back at the top. But at the same time, if someone was to say that, you know, the damage has been done there in FTX, I would kind of agree.
Very solid answer. I like that. Mander, what do you got?
Similar sentiment. Well, definitely not boom, but I think it's hard to say bust when they're already like on the ground. But I don't think FTX 2.0, I don't think this goes anywhere. And I think this whole situation really opened the eyes to people having all these, you know, assets on unbacked pretty much like you're on brokerages that are not disclosing any public information. So I think if anyone is gonna do well moving forward, if the crypto market does revive, it's going to be Coinbase, because they're a publicly traded company on the New York Stock Exchange. They have to release financials. You see exactly that they have the assets that they're saying they do. And so you know your money is at least there. When you look at Binance, when you look at FTX, all these other unregulated brokerages, there was nothing besides the dollar you saw on your screen telling you your money was there. So it literally all could have been Fugazi, and evidently it was, as we saw with FTX. So I think moving forward, if anything, what BlackRock is trying to do with crypto-backed ETFs on the stock exchange is probably where a lot of this market goes if that gets approved. But I don't think the SEC is likely to approve that anytime soon. So I think Coinbase takes over a bigger market share here. FTX goes nowhere.
I like that. Yeah, Hondo, what you got?
Yeah, so the question probably shouldn't be boom or bust. It should be like more continued bust or slight revival. I think we're all on the same
Okay,
page.
wait. Let me rephrase my question. I know it's the last person to answer it, but boom or bankruptcy?
There we go. That makes more sense. Well, I don't want to say boom. You're still not giving me the I think they're going to be steady where they're at. And the reason I say that, obviously there's, unrepairable damage that's been done. And they've lost that trust factor, which, especially in the world of finance, is massive. But I also think about the Robinhood situation, where if you think about Robinhood, guys, after the removal of the buy button, if you go back a couple of years to the GME AMC thing, and everybody was talking their talk about Robinhood's going to go to shit and nobody trade on Robinhood. I still see plenty of people using Robinhood, and Robinhood has managed to stick around. And I still think that people will continue to use FTX. And Noah's giving me a look for whatever reason. I'll let him go in a second here. But yeah, I think that they'll be able to stick around. But certainly no boom on the horizon for them. Again, that trust factor is the biggest thing. And I'm definitely not rooting for these guys, obviously.
Yeah, the only the only difference, obviously, and tinfoil hat time. We'll put the tinfoil hats on a little bit here. Is when you look at the Robinhood situation, you had a lot of people believing that they were almost like in cahoots with the SEC in terms of like
Stop
the fact that they didn't really get in trouble for what they did, and it seemed like they were sort of being protected, whereas FTX blatantly lied to the SEC and lied to their customers, and so it's like it's definitely a tougher situation for FTX, as I'm sure Alejandro knows, and so yeah, I think it's just like you said. I think it's really the trust thing that
the magnitude of what FTX did compared to
right.
What Robinhood supposedly did obviously doesn't compare. My point was that Robinhood lost that trust factor and still has managed to stick around. That was kind of the point I was making.
Agreed.
Yeah, the magnitude is definitely a big factor there. My scamometer is going a lot higher for FTX than Robinhood. That'll wrap it up for Bet the Bell today, guys. I'm passing it back to Hondo here.
All right, guys, that's going to do it for this morning's episode of Beat the Bell. Thank you, everybody who joined us. Fun episode this morning. We're getting ready to trade in the Discord. We'll be live all day. If you guys go to kane-capital.com, you could start trading with us. We got a 7-day free trial going. We got live trading, education all day, alerts, entries, exits, stop outs, the whole 9 yards. And yeah, that's what we're doing all day and every day. And stay tuned to see if we'll be live on Friday. I know that a couple of us are traveling, so we may not be. If we don't see you guys on Friday, we will see you guys the following Monday morning. Have a great rest of your day, guys. Good luck trading, manage risk, trade smart, do your thing, and we will see you the next time we see you. Have a good one, everybody.